I just wanted to review market opportunities. So here you have what is it? The YM. It went down here, and then it set up the tests here and here. This one was a minor move. All right, so let's go over that on the lower time frame. Okay, so left hand side is like a higher time frame. On the right hand side is a lower time frame, but it's termed in terms of bricks. So left hand side is higher brick size. Right hand side is a lower brick size. Same concept of higher and lower time frame, but using bricks instead. Renko bricks. All right. So basically, what do you know? You know it went down and now it tested. All right. So that's all you need to know um, to look for trades. Why? Now just think about this logically. All right. Where did the buying and where did the selling come from? The selling came from here. So where are you going to look to see if they're selling? The same place where it came from. There. Same place. So this, like, if you're looking to sell, you look to see where the selling came from and just mark it. Done. Where did the buying come from? It came from here. Mark it. Done. So, I mean, that's it. As far as levels go, those are in my simple approach, the I know folks look for different levels based on different things, but the idea is where did it come from and see if it's still there. And if it's there, the lower time frame will show it's there and look for an entry up. Done. All right. So this is where the selling came from. This is where you look. Why? Because that's where it came from. That's the reason. So now moving over to the right hand side of the chart. Now you're going to notice something. It was in an uptrend, retracing, really nice. And then here, let me delete all this. Oh, man. Okay, so it gets really interesting here because I knew when I saw this that, oh, this is distribution. No questions. Right here, you have volume off the top, right there. That's volume off the top. Volume off the top is one of the elements of distribution, just like volume off the bottom is one of the elements of accumulation. That's one of the things. What else do you see in distribution and accumulation? You see from that area, you have a sign of strength or a sign of weakness. What else do you see? You see springs and upthrusts. What else do you see? You see hinges. All right, many times hinges will occur before the sign of weakness, and other times they'll occur after the sign of weakness. And the same thing with the sign of strength. This right here is what I'm calling a hinge, meaning it goes up, down, up, down, up, down, up, like that. See that behavior, up, down, up, down, up, down? That up, down is characteristic of one phase ending and another phase starting. So for example, you could have distribution ending and markdown starting, or accumulation ending and markup starting, things like that, just from phase to phase. It's the way I remember it was the end of one chapter and the start of another. All right, but it's key here is that within there's a volume off the top. That's the key. All right, because it's not just arbitrary. They're selling, they're holding it and selling, distributing. Okay, right here, the big red here is the bigger than the last 100 bricks. The volume on that is bigger than the last 100 bricks. Why? Because smart money sells high and buys low. That's what smart money does. All right, buy low, sell high, and they're selling high right here. So after they're doing up, down, up, down, up, down, you have a little upthrust, which makes the case for this even stronger. When that upthrust occurs, look at the behavior. Now, this is very important to learn. Let's say this is your resistance area. Now, what do you know should happen when you break out above resistance? The breakout should have heavy volume and increasing range. right? That's, technical analysis 101. When you break out, when you go above that area, it should have big volume, big range. But you see the opposite occur. What do I mean by the opposite? I mean, instead of seeing big volume, big range on the up bar, you have big volume, big range on the down bar. That's the opposite. It's the reverse breakout. Instead of a breakout on the upside with a big green bar with big green volume, the opposite occurs. Big range, big volume going down instead of going up. So this behavior is like the reverse breakout, and it's a rejection, a clear rejection. I mean, imagine this. You go up on 200 contracts, and it gets reversed on 1900 contracts. And what is that saying? Total rejection, reverse breakout, or whatever. I don't know what else to call it. I forgot the different terms. But this is not just an upthrust, it's an upthrust with volume. It's an upthrust rejection with volume. A big difference, because you could have a little higher high and say, oh, this is an upthrust. But what do you mean? It's an upthrust. I mean, there's some qualities to it that make it very probable. So this type of upthrust has big volume. It has a reverse breakout. So you have that up, down, up, down, up, down hinge followed by the reverse breakout, upthrust, whatever, and a wave down. That is really important because it is the follow through that you want to see. So you know that sellers are able to go down. All right. They're not just caught in a range. They're able to go down below the prior support level. But once it does that, okay, now you have a very good chance that the trend has turned. All right. And that makes a high and a lower low. So now for sure trend has turned, because it's not just a lower low, it's a lower low, meaning this is your lower low and this is your next lower low. So I'm just calling it a LL whatever, lower low. All right, so it makes a lower low, lower high, and then another lower low, which is less than the prior lower low. So the trend has changed. All right, and it's bonified, meaning it has the volume off the top, up thrust, reverse breakout, going down. I mean, and volume. Look at this. See? And when it tested that same area, again, rejected. Right there. Look at this. 12 up, 27 down. What's that telling you? Attempt to go higher, rejected, reverse breakout down. I like the term reverse breakout better than upthrust because I think it's very expressive in that I'm expecting a breakout above with a big range in volume, but instead it reverse breakout to the downside. So it to me makes a lot of sense. Anyway, so here, like once it does that, I'm looking for shorts, and the market goes down. All right, now, then after that, what it did was stop run amongst all of these highs. So there's some concept called trendline liquidity. I don't like to get into all of that, saying that, yeah, there's a trendline liquidity and, they did a stop run amongst all of these. But in my opinion, if you catch it here, you'd be out by the time it goes down before the stop run. So why not? Okay, after that, it goes down. This is other sign of weakness, and then a lower low. Now, again, it's a lower low, all right? Now, what do I mean by that? This is the break, one lower low. That's the second lower low. So I call it lower low. And that helps confirm trend, right? Because you have a lower low followed by another lower low, which is your confirmation. Just like here, you had your lower low followed by another lower low. So I have very good, what's it called? It makes the case for a change of trend eminent, or like a stronger case, right? So after that, it just tanks. Right now, a lot of folks will see this and say, "Oh, I want to get in, I want to pull back, and this and that." Okay, the first thing to notice about this is it's an extremely strong wave. You do not want to play that, get in the pullback, because this one wave so strong is not a regular rally. It is an engineered move. This is an engineered move because look at the prior rallies. That this is considered a big rally. So what is this considered? It's an engineered move right above the highs. So this is not that you want nice 4 or 5 brick and then pull back, 4 bricks and then pull back. Not this many bricks, because it gets into an overbought uh, condition. So you could tell there's something wrong here, and this is not the type of pullback you want to get. Yeah, in fact, it is engineered and it is climactic. Anyway, long story short, what are the key learnings from this, which is what I'm really after, right? The key learnings here is that we have a situation where the market is in a position to test a selling wave all the way back, and when it tests, we see volume off the top and the hinge, saying that the markup is completed, and possibly the distribution also is completed. All right. I don't think the distribution is completed here, because it's actually completed here. This is your last point right here, or I forget, it's last point of supply, I think. So this is the end of mark up and the beginning of mark down. Beginning of it's like within that distribution, ready to mark down. Okay, so all right, so which are the key behaviors? This whole piece, especially in it, this piece, the volume of the top and the hinge. After that, it has to prove itself by being able to go lower. Otherwise, it may be something else. It may be reaccumulation of something. I don't know. So now it goes down, and it has an upthrust as well with a reverse breakout that goes down. And then when it tests, guess what? Selling pressure again. More volume than 100 bars in this bar right here. Has more volume than 100 bars. Clearly, this is selling pressure. And then finally, you have some pressure up, but that's just setting up the test. Okay. All right. So I think I've covered that. What else to note? All right. So I've covered the hinge. I've covered the volume off the top. I've covered the upthrust, the reverse breakout, the importance of follow through, the concept of lower, lower, low, establishing the downtrend, because it's a low followed by a lower low, right? A second lower low, establishing the downtrend, and then finally a move up, which sets up the retest that provides the entry opportunity for the short. And after that, it's just a matter of it going down and just getting out. How do you know to get the hell out of your position? It's an important point. If you're short, how do you know that you should consider exiting the position? This is very important, and the long story short is if there's a climax. So one of the things that you can use a trend line for right? One of the purposes of a trend line is to measure momentum. The other purpose of the trend line is to measure overbought, oversold conditions. But it's not the way it's used by most people, saying, okay, some touch of a trend line, go, this, not that. All right. In Wyckoff, what I know is that it's used for measuring. It's a measuring tool for measuring momentum and possible overbought, oversold conditions. So as, let's say, short, and now price is going down to the bottom and exceeding that trend line. It's exceeding that trend line on heavy volume, biggest volume in multiple waves, giving the picture of a climactic move. So why not get out? Right? I mean, isn't this indication of a climax where you have the most volume in 1, 2, 3, 4, 5, so about 6, 7, about at least 7 waves, and it accelerates down below the trend line? This is supply line. This is its copy. I think this is, I forget the terms, but this is a line and this is a line. And you're at the bottom of the channel, accelerating, braking, and on heavy volume. Now, whatever you do, do not buy. All right, that's not what you do. You don't just buy because of a touch of a line. You're measuring the condition, and the condition is oversold based on these points. It's oversold, breaking, heavy volume, and then this thing here should get you worried if you're short. This brick here, this brick has more volume than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 17, 16, 16 bricks. There's more volume in here, and definitely that down wave. So, just out. You're oversold. All right. After that, there's a massive stop run against all of this, and then the downtrend begins in earnest. But you can trade this as well. This is a little bit harder to trade because it doesn't engineer any liquidity up here. It doesn't test, retest, all that. So it's hard to get in. You have to get stuck, with this type of move. It's not going to be easy. How would you know how to get in? If you shorted the upthrust, it didn't even give much. So here, it's a lower high, but it can easily upthrust this and go in and test this area. So it's pretty hard to get into. This, however, is very easy to get into. So, that's what the market offers. All right, so that's a study of the YM turning point over here. Let's move on to the next market, which is going to be crude. All right, so for crude, this is a no-brainer trade. You're in a downtrend, red and green MAs, right? So over here, this was the first opportunity, which was a test of the breakdown, and it went down. The second opportunity was on the retest, and that's the test of the resistance level. And here, there's a very nice opportunity. All right, so in this area, when it tested, basically selling came in as it's indicated here, selling came in. Now, before I go into that, I want to point out that again, you're getting that same behavior that I showed on the prior chart of the Dow, which is what? Up, down, up, down, up, down, and then break. That up, down, up, down, up, down is a critical feature of the end of, I guess in this case would be markup and entering the distribution. The delimiter between markup and distribution is this. After that, what do we have? We have selling followed by a lower low. So that changes trend. Where is trend? You know for a fact it's down, is right here. Trend is down. And this gets a very tricky, and not very few traders were able to capitalize on this, because this move up, it gave the impression that we're done going down because of a test of this area and we're ready to go up. But really, if you look at this closely, it was a run of these two highs. It ran above these two highs, taking this high out, and its purpose was to get rid of the stops and to get rid of folks who went break even. Why? Because as this move goes down, stops are going to be right over here, 100%. Everybody who's short will have their stop right there. Why? What are the chances of it going above the high prior to the rally down? It's very low because you already rallied down. So that's what the stops are. And if you're extremely conservative, you're going to put your stop above the prior high. This move though, it ran the stop against up here and here into the hinge. So that, again, this is an engineered move. There's no question in my mind that this move was set up specifically to run stops and run anybody who got in short, who now has moved their stop at all. So this is their signature. Now, the only individuals who are able to still be in the position are the ones who waited for the trend change and then put their order in and then actually got filled on the way up. And as they got filled on the way up, they didn't freak out because price was so close to their stop. Like right here, you start sweating bullets. When you see this green wave and you want to get in, or you got in, then the following green wave is when you start sweating. That, yeah, oh shit, they're gonna run me because it's already so high. Look at this, almost at taking out the high. And then it does this and this and this, and one key thing that really set things up was right here. That beauty right there. That was a high volume attempt that was in an upthrust position that ran any stops above here, and I think it was responsible for selling on the way up. This effortful move is selling on the way up. All right, it's more volume than all of these waves, and then the puke fest began. So noticing what this is, it's in an upthrust position with a lot of volume and reverses down. So I mean, it's very hard to judge because on one hand, you're in a spring position, right? You're in a spring position coming from all this green, full retracement, spring, heavy volume buying. That's from the bullish perspective. From a bearish perspective, you got to understand you're testing a resistance level in a downtrend. And given that framework in the back of your mind, you realize that this run here that looks bullish is a stop run. And this here is a effortful move that puts the market in an upthrust position. And if it's going to go, it's going to go hard. All right. So these are the two pictures. The key is to have the higher time frame picture help frame either the bullish or the bearish picture that you see on a lower time frame. Meaning the higher time frame will provide a filter for what to view and what to interpret, and how to interpret what you see on a lower time frame. Because I can make the very strong argument that the market did this, came down to test this, which was untested before, then rallied, made a higher high. Even these are weak pullbacks, and then finally goes down to spring, heavy buying from support, ready to run, right? But if you take a look at the higher time frame, or the higher brick size, green below red, downtrend. Rally up to do what? Test. Test what? A distribution brick. That brick has the biggest volume, I think, in 100 bricks. And you're doing what? Testing. Testing the origin of a down rally. Now, with that background in mind, you look at this and say, oh, okay, markup of the retracement leg back up has ended, selling has begun, the trend has changed, the stop run has occurred, we're going back down to support. This is an effortful rally that puts the market in an upthrust position, ready to go down. It's totally different interpretations based on based on what data you have and how you are sequencing that data in your mind to create a bullish or bearish picture. Everyone's looking at the same data, but they're interpreting it differently. What are the keys to that interpretation? The keys to that interpretation is to first go to the higher time frame, second to see the level, the trend, and third to see the level. The trend is down, the level is a full test of a resistance area. Trend plus level. Now move to the lower time frame, given the higher time frame trend and level, and then take the data and make it fit the picture of the higher time frame trend and level, which indicates that it's a bearish test to the origin of the rally, of the down rally, right? So that's what happened. Okay, so the key behaviors here is here you have your hinge, you have your sign of weakness, you have your trend change, you have your stop run, you have your lower low, which is different than from a bullish perspective, which they would see this as a spring. So, oh, this is a spring. From a bearish perspective, it's a lower low. From a bullish perspective, this is buying off support. From a bearish perspective, this is an upthrust position with a lot of effort. See? Two totally different interpretations. Looking at the same thing depends only on how you are sequencing the data in your mind. And that really is a skill to develop. All right, folks, have a wonderful night. Bye.